bonds, currencies, and other financial assets. Capital markets are composed of the suppliers and users of funds. Suppliers includes household and the institutions serving them, pension funds, life insurance companies, charitable foundations, and non-financial companies that generate cash beyond their needs for investment. Users of funds include home and motor vehicle purchasers, non-financial companies, and government financing infrastructure investment, and other operating expenses.
These markets are divided into two different categories. The primary markets, where new equity stock and bond issues are sold to investors, and secondary markets, which trade existing securities.
Examples of highly organized capital markets are the NYSE or the New York Stock Exchange, American Stock Exchange, London Stock Exchange, and the Nasdaq. Securities can also be traded over the counter rather than on an organized exchange.
What is bond market? The bond market broadly describes a marketplace where investors buy debt securities that are brought to the market by either governmental entities or publicly traded corporations. National governments generally use the proceeds from the bonds to finance infrastructural improvements and pay down debts. Companies issue bonds to raise the capital needed to maintain operations, grow their product lines, or open new locations. Bonds are either issued on the primary market, which rolls out new debt, or on the secondary market, in which investors may purchase existing debt via broker or other third parties. The life cycle of a bond. The company issues a bond, also known as the bond origination. The bond can then be purchased by an investor. That investor is loaning money to a company for a specified period of time. The investor receives regular interest payments from the issuer until the date of maturity. These periodic interest payments are called coupon payments. The amount of coupon payments is determined by the coupon rate, which is expressed as a percentage of the principal. When the bond matures, the issuer repays the principal to the investor. What is corporate bond? A corporate bond is debt issued by a company in order for it to raise capital. An investor who buys a corporate bond is effectively lending money to the company in return for a series of interest payments, but these bonds may also actively trade on the secondary market. Corporate bonds are typically seen as somewhat riskier than U.S. government bonds, so they usually have higher interest rates to compensate for this additional risk. The highest quality and safest, lower-yielding bonds are commonly referred to as AAA bonds, while the least creditworthy are termed junk. Corporate bonds usually have $1,000 face values, meaning that the issuer pays the holder $1,000 on the maturity date. Baby bonds have face values of $500. For example, you purchase a 5% bond, that is a bond with a 5% coupon rate, from company XYZ. The bond has a face value of $1,000.
Investment banks, an organization that underwrites and distributes new investment securities and help business to obtain their financing. So investment bank is a division of a bank of financial institutions, serves governments, corporations, and institutions that provides underwriting of the capital raises and mergers and acquisition (M&A) advisory services. Investment banking act as intermediaries between investors who have money to invest, corporations who need or require capital to grow and run their business. What do investment banks do? So, full-service investment banks offer a wide range of services that include underwriting, M&A sales and trading, equity research, asset management, commercial banking, and retail banking. So equity research, the equity research group research or coverage of securities help investors make investment decisions and support trading of stocks. Asset management, managing investment for a wide range of investors including institutions and individuals across a wide range of investment styles. So underwriting, capital raising and underwriting groups work between investors and companies that want to raise money or go public via the IPO process. This function serves the primary market or new capital. So mergers and acquisitions, M&A, advisory rules for both buyers and seller of business, managing the M&A process start to finish. Sales and trading, matching up buyers and seller of securities in the secondary market. So, sales and trading in investment act as agents for clients and also can trade some top investment bank institutions in the Philippines. The AB Capital as Asians Alliance Investment Corporation, Asian Focus Group Incorporations, BPI Capital Corporations, Eastgate Capital Partners Incorporations, First Abacus Financial Holding Corporations, First Metro Investment Corporations, and FSG Capital Incorporations, and each.